Oil slipped, heading for the biggest weekly loss in the month, as the outlook for demand dimmed amid an already shaky market. Futures dropped 0.8% in New York Friday, poised for a weekly decline of 2.8%. The International Energy Agency reduced demand estimates for Organization of the Petroleum Exporting Countries crude this year and in 2018, and said there are doubts about the group's commitment to cutting production, according to its monthly report released Friday. Even a pledge by Saudi Arabia and Iraq to strengthen their commitment to the curbs and maintain balance in world crude markets isn't helping to prop up prices. With the latest rhetoric from the International Energy Agency, it looks like the balancing cycle is further protracted, which is not great for the market, Michael Lewin, a strategist at Scotiabank in Toronto, said by telephone. Investors need to see either Organization of the Petroleum Exporting Countries production really decline or compliance to the output reduction deal improve to believe rebalancing is happening, he said. Oil just hasn't been able to stick to the $50/barrel level in New York even though U.S. crude inventories are at the lowest levels since October, in part because recent declines are seen as seasonal. OPEC's rate of compliance with output cuts slid to 75% in July, the lowest since the accord started in January, the International Energy Agency said. The Organization of the Petroleum Exporting Countries said Thursday its output is increasing on supplies from Libya, which is exempt from the deal. West Texas Intermediate for September delivery fell 38 cents to $48.21/barrels at 9:54 a.m. on the New York Mercantile Exchange. Total volume traded was about 18% above the 100-a-day average. Brent for October settlement dropped 38 cents to $51.52/barrels on the London-based ICE Futures Europe exchange. The global benchmark traded at a premium of $3.17 to October. West Texas Intermediate. The International Energy Agency Friday lowered projections for the amount of crude required from Organization of the Petroleum Exporting Countries this year and next by about 400,000 barrels per day. About 32.6 million barrels per day will be needed from the group this year, less than the 32.84 million it pumped in July. Concerns about the persisting supply glut resurfaced after Petronations reported growing oil output, said Norbert Ruecker, head of commodities research at Julius Baer Group Limited. In Zurich, we maintain a neutral view and see oil prices trading sideways as growing shale output and stagnant Western world oil demand undermine the Middle East supply deal.